ericmother@mother.com with a weekend market analysis for the weekend of November 18th and November 19th, 2017. Let's take a look at markets here. We are coming off the lows of the day. So let's take a look at the charts, and again we begin with the big picture. Here we can see for the NASDAQ on the monthly, this is a 6-year monthly chart, so 6 years of data. We know that we had a bullish period here for 2 years while the market held above 69.1, and we've been holding above 69.1 as far as the NASDAQ is concerned for the pretty much all of 2017, which explains why we've had this nice move with only one down month. So the takeaway here is on the monthly, as long as we continue holding above 69.1, it's the same story. Don't get tired of hearing it, because that's just a fact. As long as the market is holding above 69.1, expect markets to be sideways to bullish. And that's why you'll notice the market is really not cracking, something I pointed out this past week. Take a look at the weekly chart, and we can see that the NASDAQ also on the weekly is holding above 69.1, which is a sign of strength. If you take a look at the daily, a simple line connecting RSI lows came in play this past week, and the NASDAQ held. So this line held as of the lows of the week, so no surprise that the market, even with this down day, the market is still acting like it is bullish. So until the NASDAQ can start breaking some of these short-term levels, we need a break of these short-term levels if the market is to see higher. But right now, we can say that the bulls are doing exactly what they need to do, which is find support on this line. So nothing has really broken as far as the markets are concerned. If we take a look at the hourly, this is what I pointed out this week at the lows, and we can see that there was a line connecting the NASDAQ RSI lows. Once we hit this line and the market found support, we are not surprised that the market is stable, at the very least as far as the NASDAQ is concerned. Once we tag that level, market has recovered, and here we are again recording, if not testing, fresh intraday highs. Having said that, now on a short-term basis, we see that the market is coming back to test a prior break level. So this break level here is what gave us the recent pullback. So this break gave us this recent pullback zone. We pull back slightly, and now we are coming back to test that same level. So until we move above that level, we can say hour to hour, day to day, that becomes the resistance level, and we can say that the market short term on the hourly for the NASDAQ is showing signs of sideways to down potential. And again, within the construct of a bullish market on a big picture time frame. Take a look at the 30-minute chart for the NASDAQ, and we can see this looks like an improvement in price levels, but the technicals are not following through. In fact, there's a line of resistance connecting RSI topside. So that becomes a reason for this market to struggle to hold current levels here for the NASDAQ at about 6,800 until such a time as the market can move above this line here. So that negative divergence could set the stage for yet another shallow pullback, or maybe even the beginning of a major pullback. But this negative divergence that we see right now is what is stalling the market from moving higher right now. And for the market to move higher, again, one more time, it does need to clear this declining negative divergence line. Oh, and I should have mentioned that I'm going to include some world market analysis for some major world markets towards the end of the video, and a brief discussion on Bitcoin, and then take a look at two breakout ideas. So take a look at the Dow, and keep in mind the Dow monthly continues to hold above 69.1 since late 2016. That's why the market has had a great year in 2017. We take a look at the weekly, and the weekly for the Dow, as you can see, also continues to trade well above 69.1, which is a sign of a market that is outright bullish. And to see evidence of this is take a look at this period here where we traded above 69.1 for a couple of weeks, couple of months, and the entire process was bullish. We did the same thing here to somewhere there, and the entire process was bullish. Yes, there were pullbacks in that zone, but they were shallow and short-lived. So again, here on the Dow weekly, as long as we are above 69.1, expect the market to be stable and maybe even outright bullish. Take a look at this chart for the Dow daily, and the Dow daily is and did show support on this line at the lows for the week. So connecting the lows here, you can see that at the lows for the week we are still above this line. In fact, we touched this line somewhere here. That's why the market recovered. So we can also conclude that as long as we are holding above that blue line, we can assume that the market continues to be stable. As long as this line is holding, we can assume that the market continues to be stable. Also, don't forget that we have uniform activity support at the RSI 50 level. So as long as the Dow is holding above 50 on its daily chart, the market continues to be okay, stable, if not bullish. We can also see that there is a short-term breakout that was being tested this past week based on our uniformity method. It's where the market broke out. So this movement here began this nice climb, and the market went to record a fresh all-time highs, multiple fresh all-time highs. So we take that information and draw our uniformity support line. Anytime we bounce on this line with uniform action, we know that the market is due to recover. So here we at the lows of the week, we came to this level, we held. As long as that held, we can assume that the market continues to be stable. Now, if the bears want to break this market, they're going to have to crack below that line. Something we haven't seen yet. Since we haven't seen a break, we can continue expecting a sideways to outright bullish market in the coming days and coming weeks. Take a look at the Dow hourly. And the Dow hourly was coming back to test this level, as I discussed with paid subscribers this past week. Once we hit this level here, yesterday or Thursday's move was no surprise because we had already shown support on that line. On the hourly for the Dow short term, we can see why we are struggling to hold, because there's a line connecting the top side. So this is where the market is struggling to move above. So short term, there's resistance. Don't forget that there's also support. So we seem to be stuck in this wedge. Either at some point we are going to break out and continue this recent multi-year move higher, or we break down and we start asking questions of the market. Take a look at the Dow 30-minute chart. Keep in mind at the highs we had an improvement in prices, but there was negative divergence. And once we saw that, we were expecting a pullback. We did get that pullback. Now if you take the same line that gave us negative divergence and extend it like that, you can see at the highs we've hit that level, and the market is showing resistance at the highs here of yesterday's trade. So for now, we can see short term, hour to hour, until we move above this line, we can assume that hour to hour market is sideways to pointing down. Yet the big picture remains that the market is still sideways to bullish. So you combine the two, and what you come up with the expectation that short term, yes, there's a shallow pullback, but it's going to be a shallow and short-lived pullback because the market continues to be stable in the big time frame. Now we can save time. There's no need to take a look at the S&P 500 because the weekly looks good. It's above 69.1. Monthly for the S&P 500 still continues to hold above 69.1. Take a look at the daily for the SPX. And the daily here, we can see a good bounce on the RSI 50 line on the daily. That's a sign of a stable market. And we can see the wedge that is developing on the hourly for the S&P 500. Top side resistance, bottom side support. So we've seen that over the last Going into yesterday's afternoon highs, market hit that level, and now we're pulling back. And going into the lows of the week, we hit that level and we've moved higher since. So at some point here, either we are going to break out for continued push higher, or we break down and start probing lower prices. So we have to wait for that to play out. Now, I mentioned I was going to discuss Bitcoin briefly. So this is the Bitcoin chart pretty much, and here the same conclusion. As long as Bitcoin is holding above 69.1 on its monthly chart, expect it to be sideways to outright bullish. As long as Bitcoin on its weekly chart continues to trade above 69.1, expect Bitcoin and pretty much cryptocurrencies as a group to be sideways to outright bullish. Take a look at the daily. You can see the daily continues to be constructive, and there's a line connecting recent daily lows. So Bitcoin should be stable to bullish as long as we are seeing the same chart characteristics. Here we are seeing that it came back to test the daily lows line on the RSI and held, and that's why it is still showing momentum. So as long as the monthly and the weekly are above 69.1, I would expect Bitcoin to continue showing the current strength. It's another way of saying that even with pullbacks in the Bitcoin currency, as long as the RSI remains above 69.1 on the monthly, even pullbacks are going to be shallow. There might be deep corrections, but as long as the RSI is above 69.1, we can expect that ultimately it's going to challenge recent highs and even go beyond current highs and maybe even move above 8,000, as long as the RSI on the monthly continues holding above 69.1. Now the rest of the video is for paid subscribers. Otherwise, enjoy the rest of your weekend. So if we go with the weekly chart for the Dow Transports, remember when we were trading here at 10,000, I discussed the idea that this is a line of potential resistance. Why? Because we had come back when the market was trading here. We knew that if it stalled around that level right there, we suspected that the market would pull back. Why? Because this was the break point here before this pullback. The same level became resistance, which was the top there before this pullback. And so the market had come back and gave us a double top here. So we were expecting a pullback, which made sense. Now it looks like we might get a bounce. Why? Because take a look at this line connecting RSI lows on the weekly. As long as this line is holding, assuming it holds, in other words, if this line can continue holding, then we can say that the next trend for the Dow Transports is higher. If the Dow Transports are moving higher, it means that the general market is stable, if not bullish. At the same time, should we break below this line here, that's going to be a sign of a market that wants to test lower prices. Something else we can add here, if you take the weekly closing low there, and there's a weekly closing low somewhere there, what you get is a trend line in terms of price, and this is exactly where the market is coming back to test. So if this line can hold, it might encourage people to be bullish as far as the transports are concerned. But the key here, in my opinion, is whether we hold on this line or not on the weekly. It's another way of saying that, remember here, we bounce back above 50 for that re-entry. We bounce on the 50 line here. In fact, even here for this re-entry. All these were shallow re-entry levels because it was testing the RSI 50 on the weekly. Here we test the 50. Ultimately, we go back above it with uniform action for that re-entry. And now, if this turns into another uniform activity area of support, then we can expect that the next swing trade for the Dow Transports is higher. Now, because I have some biotech ideas for you to consider, I need to take a look at the biotech space by way of the BTK. And we can see here, if I draw a simple line connecting RSI lows, just like I did for the Dow Transports, you can see that right now it is showing support on this line. As long as that line is holding, we can assume that the biotech space is now set for a rebound. Now compare that to the long-term picture, which continues to ask questions. In other words, the long-term picture continues to be not very bullish in my opinion. Let me draw that a little different. So if you connect the lows here through this break right there and extend it out, you can see that this recently has become a problem. The break point of that high in late 2015, this has become resistance. So the monthly chart is a little bit on the iffy side, but the weekly looks good. So we'll go with the weekly since it's happening and is showing support. On the daily, you can see that this declining 50-day moving average might be a problem. Just something to consider. And we can also see that on the daily, we've seen a price movement lower with improving technicals. That has set the stage for positive divergence that is now showing movement higher. If you take a look at the hourly, we can see that this is where it is struggling. Coming off the highs here on the hourly chart, we can see where the break took place here of that high. So we can draw a line where we can expect resistance. This has been tested here and it was rejected for the highs there, and now we are here. So short term, this is where it might struggle. In other words, if the market is to move higher or the biotech space is to move higher, it needs to clear this line just like the market has, and needs to clear the hourly resistance line on the chart for the S&P 500, NASDAQ and the Dow. Also, we can draw a line connecting RSI topside on this hourly chart. So we can draw connecting the tops, and you can see this is again another area of potential resistance. It's a huge question as to whether this is going to be resistance or maybe we get enough power to move above that line. Remember, the previous line was right there. So if it can clear those two lines, then we can anticipate higher prices. Otherwise, resistance here might suggest hour to hour. This is where it stalls. Now, my takeaway from here, and that's why I have those two biotech space ideas, is because on the weekly, we are still within support of this line here. I'm going to default for now to take advantage of this, or to use this as the main takeaway. As long as this line is holding, we can continue playing biotech space breakouts, because it shows that the market is at the very worst sideways because of this support here. Now, if we were to break this line, that would change the picture. That would mean that we have to be very careful when trying to buy biotech space names. Now, to save time, and as we look at commodities here, what I'm going to do is not take a look at individual commodities. I believe I covered crude oil in my previous video about a day or two ago. But I want to take a look at commodities from the viewpoint of the dollar. And here's my conclusion. So if you take a look at the dollar, of course, it came off the lows and has since recovered. So off the lows here, but has come off the lows nicely. Right now, what I think is the best way to look at this, and this applies to commodities for the most part, is if you take a look at where it starts recovering, which is this breakout here. It hasn't looked back in terms of price. So that breakout is being tested right now. So if the dollar holds support here and starts coiling up, if it recovers also above an upward sloping 50-day moving average, that recovery is going to put pressure on commodities. At the same time, if we break below this line, then I would expect commodities, the metals, crude oil, to start moving high. But my thinking here is that more than likely this line is going to hold. And if this line is holding, we have to assume that the dollar recovers and moves higher, while commodities struggle. Also, we can watch this line here on the 50-day moving average. As long as the 50-day moving average is coiling up and showing support, that's another layer of reasoning why commodities might be in pressure in the short term, because the dollar seems to be stabilizing and potentially ready for another move higher. As mentioned, I was going to take a look at two biotech ideas, and here they are. Both of them meet the minimum requirements, so I'll just give you the buy points. And ASMB needs to hold above 34.92. We can see here that the RSI is above 69.1. And MACDs are trading at 3-year highs. So the MACDs look good. Now the stock just needs to hold and defend 34.92. Take a look at ASND, another biotech space name, and here the breakout level to watch is 36.25. Now that it is above 36.25, it needs to hold above that if it is to see higher prices. We can see that the RSI is above 69.1, albeit just slightly, but needs to move well above this number on the RSI on the monthly for it to see a good move. We can see that the MACDs are trading at 3-year highs minimum. Here it is moving to all-time highs on the MACDs. So those are the two names, and they need to hold above their buy points if there's going to be a continued move to the upside. I want to touch on some world market charts. I'm going to begin with the Brazilian market, the EWZ, and we've seen this in other charts in this video. There's a line connecting RSI lows on the weekly. So right now the Brazilian market is showing signs of support. It is moving back above RSI 50 with uniform action. I thought it was breaking down, but now it is finding support. As long as this line is holding, and again the line, as long as this line is holding, we have to assume that the Brazilian market is stabilizing and could actually recover. At some point, if and when we break below that line, that's going to be it's going to be a stronger sell signal when it happens. Right now it is showing signs of support, which means it might be on a way to recovery, if not move back up. On the daily, we can see that the EWZ bounced on the 200-day moving average. There's also a line connecting RSI lows, and it has tagged this line twice, and now it is recovering. So we give you the benefit of the doubt, which means that if you still own some of those Brazilian stocks that we were bearish on, as long as you're not losing any money, you can continue watching this, because take a look at the long-term picture. And you can see the long-term picture for the EWZ continues to be struggling here. So as long as the monthly chart is still struggling on this level, we can assume that net, even though day to day, week to week, it might recover. But I think as long as this line continues to be showing resistance, we might get movements to the upside, but they're going to be short-lived. And in other words, more than likely, it would make sense that in the coming weeks and months, because of this monthly chart, the Brazilian market might ultimately have to go lower and break the weekly RSI support line that I had just drawn. So right now it is stabilizing, yes, but the monthly continues to look bearish until at some point, if and when we clear this line here. Month to month, I would lean to the idea that the Brazilian market is poised for lower prices. So the reason why I wanted to cover some world markets is because what we see here is there's a lot of confusion on the charts that I follow. Take a look at the Canadian market. There's definitely a test of this RSI line here taking shape. As you can see, the market is right now rejecting the Canadian market, even as it breaks out. This is resistance here. Take a look at the long-term picture. The long-term picture is actually more encouraging. and as long as it is holding above 69.1 on the monthly, I don't want to try and make a mistake of assuming it can't go higher. So the key takeaway, as long as the Canadian market is above 69.1, it should continue trading well. Now take a look at the daily, and the daily is coming back to test this line here. So this was a breakout, nice entry off the low of that recovery, and it went on a nice strong run. Now if you extend the same breakout line, you see that it has gone below the line and back above it with uniform action. That is a sign of a market that wants to recover. So in other words, the same line has now become support. Resistance line turned breakout line turned support line. So that is telling us that as long as that line is holding, we can expect the Canadian market to be sideways to bullish because of that support. You can even say that there is a line that connects the RSI lows this way, and that is also showing support. So until we break below these lines, the Canadian market is showing signs of holding current levels, if not recovering to test these highs. Now if we take a look at the French market, I go to the long-term monthly chart. Oh, by the way, take a look at the weekly. You can see the weekly is bouncing back above RSI 50, which is a sign of a market that wants to stabilize. You take a look at the long-term monthly chart though. I'm not sure you noticed, but I have the wrong ticker. I put in CAC. That's not what we are looking for. We are looking for the French market. All right, so I take that back. So here we can see on the weekly for the French market, line of resistance based on the recent break. Resistance here off the highs there. But I was talking about the long-term picture, and it doesn't look good. There's a line, if you want to keep it as simple as possible on the monthly chart, this is becoming topside rejection, and this line is going to cause problems for the French market. So the monthly charts, as far as the French market is concerned, are pointing to a market that is going to be in trouble in the coming weeks and in the coming months, as long as the resistance continues, as we can see here. And also we can see that the German market is showing rejection at the 69.1 threshold. There's something to watch, because the more that continues being the case, we start leaning towards a market that is gonna be in trouble in the coming weeks and the coming months. Yet on the daily is doing its best to hold. So this is the breakout level right there. A nice entry there before the market goes on a nice run to new highs. Take that information and draw our support line. So the market has already bounced on this line. As long as this line is holding, we can see that this is where you'd expect the market to start showing support. Also happens to be support around the upward sloping 50-day moving average. So yes, big picture is turning red, but we can see internally the market is stabilizing. So it means a market that you can still be playing breakouts because the climate is not destructive as of right now. Show you another market that I noticed looks bearish on the monthly chart. It's the STI, or the Singapore Straits Times Index. And again here, just like we saw in the Brazilian market, there is a line that has been a problem going back to the break. This break right there in 2011 of those highs. Since then, this has become where the market has struggled. We struggled to hold that level of those highs. We struggled here off those highs, and now we are forming a double top. So that is not a good picture. As long as that continues being the case, and as long as the double top is showing, that means that we can expect that the next couple months and maybe longer might be problematic for the Singapore market. As long as this is showing a double top rejection. Let's take a look at the FTSE daily. Oh, and before we do, just take a look at this line here. So the FTSE's come off the highs here of the last 2-3 weeks. It's down, but on the weekly, it's coming back to test this line here. If that line can hold, then it can recover. Take a look at the daily. The daily is also doing the same thing, doing its best to hold this RSI lows line. If that line can hold, which is also around the 200-day moving average, then it has a chance of moving higher. But take a look at the long-term picture. And the long-term picture for the FTSE doesn't look very encouraging, because there is a line connecting the top side, and as long as this is showing rejection, this means that in the coming weeks and in the coming months, we shouldn't be surprised that this market has stalled already, and that the next big trend could actually be lower because of continued resistance on this line here. So we saw Japan come off the highs recently here and pull back, sharp pullback, but is now recovering. Well, one thing we do know is that generally speaking, as we can see here, this movement above 69.1 is never the high. For the most part, you're going to have to see an improvement in prices with declining technicals, and that is where you make a pullback setup. So in other words, this big zone here where it was trading above 69.1 generally is not going to be the high. The high is going to come in theory when it makes a lower high while prices make an improvement. So this improvement with declining strength, in other words, aka negative divergence, is what would set the stage for a pullback. In other words, what I'm saying is it won't surprise to see this clear the recent daily closing highs, if not intraday highs. And we can see evidence of support also on the RSI because of this line here. If I draw it this way, it will make sense. The prior resistance line turns breakout line. So we break out here. We have an entry there for a nice move to the upside. We are coming back to back test that line. It has held. As long as that line is holding, we can see that short term, this market is pointing higher. Now this is similar to the Australian market, because if you take a look at the prior resistance line, and then there's a breakout right there. So what was the breakout level has now turned into support. So as long as that is holding, we can assume that there is going to be a movement to test current highs, if not move above current highs. Because as long as this line is holding here, then we can expect a recovery test of the highs. And at the same time, if we break below that line, that's when we are going to know that the market doesn't have the appetite for movement higher. Now compare and contrast that daily view with the long-term monthly view, and you can see the challenge here is pretty much based on this line here. So either we break out above that level and have a chance of moving higher, or we continue stalling here, which is where the market has been stalling. So if I remove the prior lines, you can see that the market has been struggling to hold this level here. So we need to clear that line and clear the top side resistance line if the Australian market is to move higher. Let's take a look at the Nifty. After a couple of days of pullback, it bounced on the 50-day moving average. We can also see that this is where it breaks out, or moves higher off the lows of late 2016. So we take that information and draw our uniformity support line. Anytime we bounce on this line, we know that that is telling us the market wants to move higher or bounce. You can see here, same situation. Uniform activity below the line, back above it for that re-entry. And here, uniform activity to the line and back above it. So the Indian market, after pulling back a couple days, is now stabilizing, which means that one can continue being bullish by buying breakout stocks or momentum stocks because the market is stable. Now compare that with let's take a look at the hourly. The hourly, as we've seen with other markets, S&P 500 for example, on the hourly we have topside resistance coming in play. So it's a confusing setup, but we can see here that's the resistance hour to hour. The market would have to clear this line before it goes higher. Even though it has daily support, it has walked straight into resistance on the hourly. Now the way you break that is take a look at the long-term picture without confusion, and the conclusion here is very simple. As long as the Nifty is holding above 69.1, markets continue to be sideways to bullish. Alright, so 69.1 is the key there. Now I'm going to conclude with one more chart, which is the Swedish market. Whoops. If you take a look at the Swedish market, it doesn't look that encouraging, because this is the break line here. That break off the highs of 2015 led to a correction, if not a bear market. So a huge drop there. And now if we take that information and draw our uniformity resistance line, this looks like double top rejection here and here. So the monthly chart does not look good, and it might be suggesting that in the coming months and in the coming weeks, this market is poised to go much lower, as long as we are seeing this show double top rejection. There's also the argument of rejection twice here when trying to move above 69.1. That's not good. Also, you can draw a line connecting RSI topside on the monthly. Should look something like that. So this is a negative divergence line while the prices were making an improvement. So that negative divergence, yet again, sets the stage for a market that could very easily be pulling back into a major bear market drop. As an example, the last time we had a double top rejection at the 69.1 level was here in 2011, before we get this drop. So some of the long-term monthly charts don't look great. In other words, it depends on the specific market. In other words, if the market is above 69.1, like the Dow, like for example the Dow, NDU, or DJIA, whatever, whichever one, or SPX, or even let's say the Nifty, as long as your market that you're trading is trading above 69.1 on the monthly, then the market that are above 69.1 should continue being sideways to bullish. But we've also seen other markets that look very bearish on the monthly. So maybe the markets that look bearish are leading the other markets that look bullish. In other words, eventually, if other markets start cracking seriously, worldwide there's going to be synchronization where markets worldwide are going to also start reflecting lower prices in the coming weeks, maybe into at some point in 2018. So I'm going to leave you with one chart, which is the FTSE All World Index, or All World Index. And as long as this chart is above 69.1, we can assume net worldwide markets continue to be sideways to outright bullish. Eric Mother, mother.com. As always, good luck, peace, and blessings. Enjoy your weekend. I'll keep you guys posted as of the new week, when the new week begins. Otherwise, see you guys next week. I am out. Mwah. Woo! Yeah.